Hello everyone, my name is Mark Newman. I get a lot of questions from people who are either starting up a business or buying a business about what's the best structure for them to operate through. So therefore I'm preparing a series of videos. We're going to go through 4 examples. Firstly, operating as a sole trader, then a company, then a trust, and then a partnership. Now we can operate under a combination of all of those. Now what I always recommend though is always get independent advice and check that the structure is going to be best for you, because there are a number of factors that we need to consider prior to setting this up. Firstly is the cost of setting it up. Secondly, the risk that's involved in all the different structures for both you, the business, and also for yourself. And secondly, the taxation implications. As what we would want to make sure we don't go is just for the cheapest and end up for the worst taxation implications. So we want to make sure that we cover off all bases and get this right. Today is the first part of this series. I'm going to actually be going through operating as a sole trader. Now what is a sole trader? That is basically operating under your name. So for example, if it was me, it would be operating under the name of Mark Newman. Now I can actually register a business name and trade, for example, as Mark Newman Accounting Services if I would like. So it doesn't restrict the name, it just means that everything's in my name. So why do some people choose a sole trader, and what are the advantages of it? Well, the advantages are, firstly, it's very cheap to set up. So for example, if you're going to set up a company, you have to register that with ASIC, which has costs. Whereas a sole trader, there is nothing to actually register. What we need to do is set up though an ABN, which is a very simple and easy process, and if we want to set up a business name. Now I've just helped someone do this. It took us about half an hour. So it's quite a quick and easy process for us to do. The other advantages of a sole trader has cheap ongoing costs. So for example, if we're operating as a company, the company would have to do accounts and a tax return, and you would have to do a tax return yourself. Whereas a sole trader, everything gets included in your name, therefore your taxation return, which makes it easy to use. It's also very easy to close down a sole trader. For example, you just stop doing the business, and you don't have the cost of winding down a company or other structure. Again, very simple to do. But what are the disadvantages? Well, as everything's in your name, it also means the risk is 100% in your name. So for example, if something was to go wrong with the business and the business was to get sued, effectively they are suing you, and any assets that you may own are also in the line to be taken down with the business. So for example, if you own shares, cash, or a share in a house, and something happens in the business, the creditor can claim against your house, which obviously is not a good situation. In addition, any profits go into your name and that's taxed at your rates. So depending on the level of profit the business is going to make, that may not be an issue. But if it could make super profits or very large profits, and we don't need those as wages or drawings, we may want to retain them in a structure that has a lower taxation rate or the ability to distribute to family members. There's quite a few implications we have to consider with that though. So who, for example, would use a sole trader? For example, a tradie who's going into business for himself for the first time. They may have just finished their apprenticeship, they've got no assets, therefore nothing to protect. Therefore, they're looking to set up cheaply because they don't have much money and they want to invest as much as they can in the business to get up and running initially. Secondly, for the first 2 or 3 years, they're not going to make large profits. Therefore, taxation rates in their own name versus a structure may not be different, and again they may be single and not have the ability to distribute to family, or alternatively the partner's already on a good income and there's not a taxation advantage of doing so. So therefore a sole trader structure may be appropriate then. But what we also need to do is keep reviewing this every few years to make sure that their circumstances haven't changed. So for example, if they start trading really well, making good profits and building up assets in their own name, or bought a house, inheritance, etc., we may actually want to review the structure at that point in time. So whilst it's a good structure for people who are starting out who don't have much, we also want to make sure it's an appropriate structure for going forward. So if you have any questions about structures and what's appropriate for you, please do not hesitate to contact me. And in the next videos we'll be covering off companies, followed by trusts, and followed by partnerships. Thanks for listening. Mark Newman.